Hey folks, David Frost, mystrategicforecast.com. This is Monday, June 1, 2015. Inside the numbers tonight, this is going to be our first members-only video, only access to members. So I just want to touch on a couple of things, and then we'll get into all the analysis. What about YouTube? So what I'm going to do, for those of you who care, I'm going to put up some lessons on YouTube, little snippets here and there. So a lesson on a particular chart pattern, maybe a lesson on Fibonacci retracements, maybe a lesson on a couple of different other things, 2, 3, 4, 5-minute type stuff, and all things that'll, accumulate to make you better traders, to understand the markets, at least as I see them. I'm not always right, but at least, give it best effort all the time. So the second item here is member-shaped analysis, kinda. What I mean by that is, this is for you, okay? I can't do this without subscribers. So what I want you to do is I want you to give me feedback. I need to know what you want to know. Okay, if I'm not telling you guys something that you want to know, tell me. I'll cover it. As long as it's reasonable. If I'm covering something nobody wants to know about, if nobody wants to hear about the US dollar, then let me know. I mean, if a bunch of people just flood me and say, quit going over the dollar, I'll stop going over the dollar. The point is that you have the ability to say, here's what I want. So my point is, it doesn't matter if one person sends it or a bunch of people send it. I don't care if 100 people send it. It doesn't matter. If it's something legit, I'll consider it. And if it's not, I'll tell you why. It's just that simple. So this is for you. So I want this to be interactive. You can send me emails anytime you want. I'll answer you. By the way, over the past few days, I've been having email problems, and I didn't realize it until recently, so I don't know when it started. So if you've emailed me and I didn't get back to you, it's not intentional. Send it to me again, and I'll get right back to you. I apologize if that happened. Okay, so let's go over to the E-mini, all right? That's not the E-mini. That's Lumber Liquidators. Okay, so the E-mini contract, let's wait for it to come up. Okay, here we go. So intraday today, we had a pretty good swing. We were up as high as, 2017 or 18, right? At the high, it was 2117.75, and at the low, about 2100. And 2100.25. So pretty good swing. What I believe is happening, let's zoom out a little bit. Okay, the 2115 is obviously formidable resistance. Okay, you can see where the market fights it. It pops over, then it fails several times. But I believe we're going to carve out a bottom pretty much right here. There could be some more downside tomorrow. The market closed weak today. Let's just backtrack to that a little bit. Go back to the 10-minute chart. You see, this is weak. We rolled over, and now the market's making what I would consider a bearish, call it a flag pattern, a bearish wedge. It's not really a wedge. It's more of a flag. It's more of a bearish pattern. I don't care what you call it. I'm not into names. I'm into the results. So we'll see what happens when we wake up in the morning, because the aftermarket session doesn't tell you much. It's light volume. Therefore, they can pretty much do whatever they want with the market. But, I still think there could be a little more downside, and here's what it is. So let's go to the daily, all right? So here's what the downside is if we should get it, and then we'll go to the other side, okay? 2105 was obviously important today. We dipped below at one time down to 2100, but 2105, we beat it all day long, or all morning long for a while. And so the next area of resistance is going to be 2090, 2091. I have 2091 written in here. I don't know if you could see that, but this purple line, the top one, see these two lines here? The top one is 2091. The bottom one, the one below, is 2085. This is 2070. That's if we really began to flush, and I don't foresee that right now, but 2085, if we begin to get below 2105 on an hourly closing basis, okay, you've got to start looking at 2090, 2091. and 2085. Those are the two numbers. But if they hold, and I'm talking about like tomorrow, okay? If they hold, and we begin to firm up and close hourly above those levels, and then we get above 2105, then you're gonna. That to me, the bottom is in, and you're gonna see a multi-day fall into a multi-week rally. I believe we'll see new highs again, and I believe we'll have somewhat of a panic buy. Instead of a slow grind day after day, a few points a day, I think at one point we'll experience one of those melt-up scenarios. Maybe it's short covering, panic buying, whatever you want to call it. We're not there yet. It's not important. So what about the upside? 2115, you got to close above 2115 hourly, obviously, and then daily following that. Then it's 2123. That's the top purple line here, 2123. That's really your top target. And what I mean by that is, in my mind, in my analysis, if you close above 2123 hourly and then daily, even though we have one more point where we went up to 2034, okay, I think that's confirming in my mind new highs. Okay, so 2123 closing hourly above that level, you have to be long the market. Well, you should be long anyway. I'm not saying, intraday stuff. I'm just saying, generally speaking, we're going to see higher prices. So whether you're holding the stocks in the portfolio, your own stocks, whatever it is, this is a time to be long. You may have days where there's going to be down days. Tomorrow morning may be a down morning. We may finish up on the day. I don't know yet. But what I can tell you is this is still the bullish part of this market, of the year. Okay, and there's some more upside to be had. Okay, so that's really the story in the E-mini and the S&P. You guys can, if you want me to go over the spider, both the E-mini and the spider, email me and I'll do that. I'm going to leave out the spider just for now because I took out some stuff I took up some time in the beginning, so I don't want to hold you up. So let's go over to gold. And, you know what I'm going to do is I'm going to talk about some stocks too. Let me do that at the end. The gold market, it was interesting, Let me go to the intraday because if you remember on Friday, you got to forgive me, I'm a little choppy tonight. I have a sore throat and it's killing me. Excuse me. So if you remember from Friday, I said, let's go look at the numbers. We knew that 1205, 1206, I have 1205.82 was very important. And I said that we would most likely get up there, and it was really the challenge of this, red candle, okay? And we have this thicker purple line is 1205.82. So what happened today? You know what happened today. What happened today was we hit a high of 1204.70. So that's a miss. So this is interesting, right? So now I like my targets to get hit. Every analyst likes their targets to get hit. That's just the way it is, okay? It kind of gives us a completion of the trade, all right? Whether we're in it or not, it's the completion of the call of the analysis. So I think there's still more upside in gold, but I don't like what happened today, and I don't like it being under 1190. So you have to really begin back upward and really close above 1195 hourly and beyond in order to see higher prices in my book. Okay, I don't like this down here at 1190 where we are as I make this video, 1189.40. So I'm not long gold, I'm not bullish gold here, but above 1195, at least into tomorrow, hourly closes above there, and I believe that we'll take another run back up. And if we do that, then I don't think we stop at 1205, 1206. That's the kicker. Okay, the kicker is if we start back up, okay, if this was a fake out, right? If this was one of those stutter steps, okay, and we start back up, then I think we go higher. So we'll see. There's no way to know until it either begins or we begin to fall away, meaning downward from 1190. and then the trade's off. So right now we're in that no man's land. We're at 1190. I can't tell you which one way or the other, which way it's going to go. I have to see it move. So, but what I can tell you, if we begin to go back higher, I think we go higher than the initial target at 1206. Okay, so that's kind of where I stand there. But that was a good call from Friday or Thursday, or actually I was saying it for a few days. I know that, but yeah, it was just it was in the cards, but we didn't get there. We missed it by $1.50 or so. Okay, GDX slightly down today. Nothing doing. You know, I'm going to go to the larger time frame here and show you. We bounced off this first trend line here that I drew. Once we broke the upsloping trend line, I drew this one and then this one, and we bounced off this one once, twice, 3, 4 times. We'll see if it holds. But if gold comes down below 1190, this won't hold. This will have a prayer here, and if it doesn't hold here, it probably goes down to double bottom down here. But we'll see. But gold's got to participate for this thing to get going. But right now, it's not going anywhere, and I don't see it going higher. You have to have gold move. That's basically the bottom line. But how high would it go? Even if gold moved, how high is this thing going to go? Well, right now, I mean, you'd have a really difficult time getting above 21 and a quarter. So there's not that much upside. There's $1.50 tops, unless we really have a good spike in gold. We'll see. Okay, but we'll keep an eye on it. Oil didn't do anything. You know, we had that nice up move last week, and oil was down a little bit today, and then it recovered and finished nowhere. Again, we're looking for a trade like I had the other day when I said oil is going to go up $2, and it went up to 60 and a half or whatever that number was, 60, 70. I had it at 60. That was it. From 58 to 60. And so I'm looking for another setup. If we get some more, you know, days in a row of kind of sideways forming a bull flag, then we may take a trade upward, but we'll have to monitor it day by day and see what's what. Right now, there's nothing doing. Bonds. This is the M contract in bonds. I think we're switching over to the U contract, which is September. But bonds had a fall today. Let me see what we've got here on the intraday chart. Had a pretty good fall, up at 157 down to 155. You know what? I always talk about the TLT. I don't know why I'm talking about bonds. Forgive me. It's the same routine anyway. TLT was weaker today, so we had lower bond prices, higher yields. Higher yields does typically put pressure in the financial institutions. Okay, some were up, some were down, but just generally that's the way it goes. I don't really expect much right now in the bond market, and the reason is because, okay, we had this bottom here that was a nice bottom. All right, so then we had an up move, and now we're pulling back. So what did we make? We probably made, and I don't even know, this looks to me like it's somewhere in between a 382 and a 50% retracement, okay, from this low, and it's 50%. So we made a 50% retracement. Where's 618? 120 and a quarter, give or take. That was a little rough. So we could have another dollar in the downside, and based on how it came in there, and based on what type of reaction we have off that level, that may have been just a corrective move waiting for another move higher, right? You know, I talk about this all the time. We have A, B, C. Okay, the market loves to move like that. Look, A, B, C, kind of, sort of. A, B, C. It just does it very, very frequently. So, you know, when you're looking for it, you can find them all over the place. So A, B, C. So we go up, we make a pivot high, we come down to the 50% or 618 retracement, find some support, and then we're readying for another move higher. And that may be the case, but we don't know yet. So we'll have to see how that sets up. And if it's setting up that way, we'll obviously talk about it. And then maybe there'll be a trade set up. We'll see. But right now we're waiting for where is this next bottom going to be put in. You know, because if it continues down, then this is your only line of defense. And if you break through this purple line, you're going to come down to 115 and a half or in that neighborhood. So you don't want to be in the TLT on that ride down, because that'll be painful. So let's let the market tell us what to do, and then as soon as it tells us, we'll do it. Okay, so we talked about the market, we talked about bonds, we talked about oil, we talked about gold. Let's talk about the dollar, and then we'll talk about some stocks. The dollar really didn't do anything today. Well, it did. I should take that back. It moved up today. I shouldn't say it didn't do anything. It did move up today. I was actually looking for a move downward, but what's turning out to be the case, sorry about the chart here, what's turning out to be the case, and you can see I have my fib levels traced out here already. What's turning out to be the case is this up move here is now turned into a sideways, and then maybe another move higher. So this was an A, and B doesn't always have to be down. B could be slightly down to sideways. It's really a matter of eating up time. It's not necessarily as much price as it is time. When the market is consolidating for a move, it's really just kind of resting, right? It's taking a respite for another move. All right, it's kind of like pulled in for gas, and once you're filled up, you're ready to pull out again. So, we have an up move, and sometimes the move is down, corrective, and sometimes it's sideways. And when it's sideways, all it's doing is eating up time. How much time does it need to eat up? That's a great question. This is stuff that I wouldn't talk about in the YouTube videos, but I'm going to talk about it here. Usually, and it's not an exact science, but you'll see more often than not, when a market is consolidating, readying for another move. So we have an up move, we consolidate, and then readying for another up move. A lot of the time, I can't say every time, and I can't give you a number, but I can say a lot of the time, it goes 6 to 10 bars. And what I mean by that is if you're on a daily chart, it's 6 to 10 days. An hourly chart, it's 6 to 10 hours. A 10-minute chart, a lot of times you'll see moves in 6 to 10 minutes. Okay, so let's just go and look and see what we have and how you would count some of those. Okay, let me go to, I don't want to use a dollar. Let's just use something we look at all the time. Let's use this spider. Okay, well, by the way, let's finish up the dollar. All right, so we had an up move. And I always count the peak as one. Okay, so the peak was the next day. So the peak was here. Okay, so we have 1, 2, 3, 4. Okay, so what I'm saying to you is someplace in between a couple of days from now, all right, we have 1, 2, 3, 4. Okay, let's say we have tomorrow is Tuesday. So Wednesday, I begin to start looking for a move higher if in fact this is going to turn out to be consolidation readying for another move higher. Okay, it may not happen on Wednesday, it may not happen on Thursday, it may not happen at all. All I'm saying is, and let's go over where I know this happens all the time on the spider, okay, and let's just go over and we'll look at a 60-minute chart, all right? 60-minute chart for some reason or other happens to be my favorite. Well, it's a little choppy here. Let's look at the E-mini where it's not so choppy. Okay. So let's say, let's look in here, this zone here. All right. So we have a high and we count that as 1. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then we start higher. Okay. So that was in the range. Again, it's not an exact science. A high, okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and we made a move down on the 11th candle. Okay, then we started moving kind of upward to sideways, right? 1, 2, 3, 4, 5. Okay, we came up one short. All right, how many bars is this? 1, 2, 3, 4, 5, 6, 7. Reversal. All right, so it's not like you can trade from this as a given rule. You can use this with other factors, and I do. Okay, this is part of the cycle analysis that I do on bigger time frames, and I use it for other things to determine market turns. Okay, so you're getting a little bit, peeling back the onion a little bit here. So So my point is that when you see, let's go back to the dollar, and then we're going to do a few stocks, and I'll let you go. When you see, well, here, this is a great example. Okay, we have a big up move here, and then we start from the pivot high, the next candle. This is the 60-minute dollar chart. 1, 2, 3, 4, 5, 6. Okay, I don't know what's going to happen next, but over the next 3 to 4 hours, I would not be surprised at all to see the dollar begin to move higher. How much higher would it go? That's a great question. And remember, I talk about market symmetry a lot. I would expect it to go, I'm gonna show you. From high to low, this candle, 97.64 to 96.97. So what's that? Call it 70 cents, 75 cents. I can't do the math in my head, okay? Hold on. All right, it's 67 cents. I didn't want to be off by that much. I had to get the calculator out just to double check. Don't want to be embarrassed. Okay, so how high would it go if we did make a move up? Well, I would take the low point of this consolidation pattern here. All right, and where is that? That's at 97.42. Add 67, and there's your target. All right, not saying it's an absolute. It's just a good guide. Okay, so if you're in it for a quick trade, for example, something like this, then I would be taking profit at that level and maybe holding some for the ride higher, or maybe take it all off. That's up to the individual trader. But that just gives you an idea of what we'll be looking for. So you'll be looking for a Pierce over 98, slightly over 98. So it's about 8 o'clock at night. Monday, we'll see what happens. I'm going to keep my eye on that, see what happens. That's the 60-minute dollar chart. Okay. Let's go over a couple stocks that are on the list, on the portfolio. Let's talk about CME, CME Group, and I'm going to zoom out a little bit, and I'm going to show you, let me even zoom out farther, okay? I'm going to zoom out in a monthly chart, okay? First, I'm going to show you a Fibonacci retracement, all right? Okay. Now, the point I want to make here, and remember what I just talked about, okay? I just talked about when markets consolidate, they're readying for a move higher. So you can see what I'm looking at here on, this is on a monthly chart. Okay, this could take a long time, but that's not what I'm looking for. But it's in the analysis, but I'm not thinking this is going to take another 3 or 4 months. That's not the point of me showing you this. But the point of me showing you this is we had a big up move, and now we're kind of building momentum, if you will, for another move higher. And when that happens, right underneath one of the fib retracements, it's telling me it wants to go to the next level, okay? And that's what it's telling me. Will we get up to 110, 111? I don't know yet. But that's what that normally will tell me, because look what happens. We stop at the 25% retracement, and we get going, and where do we go next? To the 382. We consolidate, we go to the 50%. We go back to the 382, back to the 50, up to the 618, and you can see what happens is it's like a stair step, right? We go up one level at a time. We don't go up all at once. We go up one level at a time. We come down all at once, but we go up one level at a time. So that's what I'm looking at on a longer term basis, okay? On a shorter term basis, I'm looking at an uptrend. We have the market above the 200 period moving average, the blue line is the 50 period moving average, and the red line it's hugging is the 20 period moving average. That's also on a weekly basis, okay? Let's zoom out to a daily basis. Well, again, we're above moving averages. We've been chopping around a little bit last few days, but we're above moving averages. There's nothing wrong with this market, okay? Or this stock. So that's, the reason I bought it is because I like the longer term chart all the way down to the shorter term chart, okay? I don't care about the fundamentals. I don't care about the news. I don't look at the news. I don't care what they do. I know who the CME is. I know what they do. But the point is that as long as I have a stock that is relatively liquid, and this is a big one, it's not as liquid as I would like, but I can see the longer picture here. And as long as I feel that we're in still the bullish part of the year, then I'm going to be okay with being long stocks, and I want to pick stocks that have an opportunity for a nice multi-point move like this one, and I can see this one developing. So that was CME. Let's look at IYT. Okay, So IYT, and I know I had some questions on IYT because we were in, and then it was up the next day, and then it took a fall, and I get it. I know. But here's the deal, okay? Let me give you the real deal, okay? IYT, all right, it just came into, let me draw this in. Just came into, okay, well, that wasn't it. How about that? I think I'm looking at IYT, and I can't figure out why this chart's not working. IYT, all right, that was something else. I don't know what that was. All right, here's what, I'm sorry about that, folks. Here's what I'm looking at. So let me do this fib trace in, all right? So from pivot low in October to pivot high in, I think this is December, right? November 28. All right. We just came into a 618 retrace. Now, I entered the IYT a couple of bucks higher only because I had another calculation, and I didn't know if it was going to get all the way down to the 618, and I wanted to be in because it's in very oversold position, and the airlines are very oversold, and I just know that they're going to rip higher. And today the airlines did rip higher, and so I was in this thing probably $1 or so earlier than I normally would have been, but it doesn't matter because it's going to bounce, and it started to today. And the reason why we were in at these levels is the 618 retrace, which comes in at about 148.5. Okay, the low was 148.43, so I think it's good. And I'm looking for higher prices in the transports again because I believe that the market's got one more jolt higher at least in it before we roll over for the next few months when it does roll over. And when's it going to roll over? We'll get there when we get there. But I think we'll rally up through June, and I think we'll roll over sometime maybe mid to late July, if not before. But I'll keep you in there. We'll know it when we see it. Don't worry about it. I'll talk about it as we get closer. So the IYT, so there's the reason I bought it, right? And, there's just even if we came down, you're going to have a huge amount of support at 144. I don't want it to happen, but if it should, that's a huge level of support. But if you look at what happened today at the airlines, okay, you had, let me go to the hourly chart. I mean, look at these rips higher in some of these airlines, UAL, you had Southwest, right? These rips higher. This is telling you that there's some short covering going on. There's some buyers, with an itchy trigger finger, looking to add to positions they have in portfolios. And I'm talking about hedge funds, mutual funds, pension funds, all that stuff. So as it starts to rip higher, you get a little short covering, and that squeezes a little bit. But these airlines were. They're very, very oversold. So if you look at let's look at the daily chart of Southwest, right? I mean, look at down here. This is where people sell. This is where we buy. Okay. People are saying, I don't want to catch a falling knife. This is no falling knife. This is into resistance. Into support. Okay. When you have a pivot high, a huge green bar here, a huge green week. Okay, this was a breakout, and you just came down to test that. From a technical perspective, this is called a buying opportunity. This is called support. This is not a time to be selling. This is a time to be a buyer. So was this a bottoming signal? Yeah, it could have been. Could we come down and could we, come retest this low here, down here? Yeah, we could, but we're gonna have a reaction off these lows here. This is not a time to be selling the transports. This is a time to be buying them. Let's look at Walmart. I'm sorry this video is so long, folks, but I'll get the hang of this, making it just for the members. We'll get in a rhythm, and I'll cut it down. Just give me a few days to work out the kinks. Okay, so Walmart's been struggling. There's no doubt about it. But Walmart, let's go to longer time frame, okay? There's positive and there's negative, but I'm going to give you both, okay? So I'm going to give you, let's do a fib retrace, and then I'm going to give you something that normally wouldn't do, okay? Well, I don't know where that high is. High is 90.97. I thought that went in too high. 90.97. Okay, good. All right. So here's the deal. All right. ideally, we would have liked to stay inside this big month here. The low in this month was 75.59. Okay, that didn't happen. All right, unfortunately, we closed below there. But the next line of defense, look where we are, the 382 at 72.26. All right, that's not that far away. So I know there's going to be a ton of support in this area. So I'm not too worried about Walmart. And you know Walmart's going to catch a rally when the market catches a rally. So intraday today, Walmart tried to catch a bid. And, you know, we opened up and it rallied and then we kind of broke down. But if you really look what happened, all right, and just look from Friday, you know, where are we? And I know I use these all the time because they work. But look, all right, so this is kind of puts the market in perspective. This is a 10-minute chart. 10-minute charts whip around. You have this low from the other day up to the high today, and you rolled over, 382. You didn't even get to the 50% retracement. So this is not a bearish sign on a 10-minute chart. This is not a roll. This is natural. Market goes up, market pulls back. A, B, C. I mean, right? It just keeps going over and over and over again. It's the same routine. Whatever you look at, it doesn't matter what the stock is, doesn't matter what the market is. They're all the same. All right, so, and I use these Fibonacci retracements all the time. Why? Because they work. I mean, how many times have you seen them on my charts and you see where the stock stalls out or trades right into one of these levels and backs off? I mean, it just, you know, constant. When they stop working, I'll stop using them. So, look, I'm not worried about Walmart. Would I like a better looking chart? Yeah, I would, but it just is what it is. It's not, I'm not worried that it's going to fall out of bed. Look, it's a big liquid stock. Okay, there's tons of institutional ownership. They're going to defend, they're going to buy this level here at 72.25 if they have to. Okay, because they already own it, and they own it at lower prices, they own it at higher prices, and they're going to, you see how many times the market, how many times Walmart bounced off this 382 retrace, the 72.25? Watch this. It was here, 1, 2, 3, 4, 5, 6, 7, 8, 9. You know, maybe we're coming into 10. That's possible. But that tells you this level is very, very important. I'm not telling you this level is important. Walmart's chart is telling you this level is important. So this level is important. So that's why I'm not worried about it. So hopefully that gives you a snapshot. And it's going to rally when the market rallies. So don't worry about Walmart. Let's give it a wrap there. That's enough for tonight. Send me feedback. Let me know what's going on. Tell your friends. Get your friends to. If you think this is good, you know the biggest thing you can do for me, and the biggest thing you could do for a friend is tell them about it. Give them a link. Let them go try it out for themselves. I know that if you stay with this, A, you're going to learn. And B, you're going to make some money. We'll do it together, okay? So the best thing you could do is tell your family, tell your friends. Don't share the membership. That's cheesy. Just tell them, become a member, and learn how to trade the markets, and you'll change your life. You'll make some money that you didn't have before, and you'll stop losing money doing stupid stuff. And I know you folks, because you're here because you've seen me long enough that you know that this is for real. This is no BS. So with that, I want everybody to have a great evening. We'll catch up with you tomorrow. I'm David Frost, mystrategicforecast.com. Thanks for being members, folks. I appreciate it.